It gives me great pleasure to introduce our next panel from APIs to payments. We now go to embedded finance, which many people think is the continuation of open banking, but I'll leave that up to our experts to discuss. So I'm going to bring on Meital Raviv, who's from Hapoalim. She will be moderating this panel and will introduce the panelists. So thank you very much, Meital.
Yeah, thank you, Johnny. So hi everyone and welcome to our panel. So my name is Meital Raviv. I'm leading the digital strategy and fintech innovation at Hapoalim, the largest bank in Israel. Previous to Hapoalim, I worked at KPMG and before that for Bank Leumi. So it means that I have been in the finance industry for a while now. We are going to talk today about embedded finance, and here with me are very special guests. I will let them introduce themselves. So we'll start with you, Noam.
Hello, everybody. Nice to be here. Thank you very much for having me. So my name is Noam. I'm the co-founder and CEO of Osu. We're a payments and business management platform for self-employed in the UK. Before Osu, I was part of a different startup called Vala. We mainly dealt with remittance, money transfer, and payments. I also worked at PayPal in the past. Thank you very much.
Thank you, Noam. Yoav?
Hello, nice to be here and thanks for inviting me. My name is Yoav. I'm the CMO of UNIPaaS. Same as with our co-founders, I also worked in a big global payment organization for several years, and we started this new venture last year, and excited to be here and share with our knowledge.
Thank you, Yoav. And last but not least, Tim?
Hey, thank you very much for having me. I'm Tim. I'm Chief Commercial Officer at Zopa. Zopa is a UK challenger bank aiming to be the best place for money in the UK. Before joining Zopa, I have a background in sort of UK fintechs across largely the consumer credit space.
Okay, thank you guys. Good to have you here. So embedded finance, just to straighten up the lines, a lot is being said about this trend for the past couple of years. And as Johnny mentioned, a lot of people are talking about the embedded finance as the evolution of open banking. And we see more and more non-pure financial companies offering financial services through their platforms. The most common example, of course, are Shopify, and of course we have Amazon and Wix and Uber and Grab, and there are a lot of names around this area. And there are even voices that are saying that this is the next revolution, and it's going to revolutionize the consumer experience in finance space as the same way e-commerce did to the retail. Having said that, I think that my first question would be to all of you guys, what are your thoughts about this hype? Is this really a hype or reality or something in between, and how it affects your company's roadmap? So Noam, maybe we start with you.
Thanks, Meital. So in my opinion, it's definitely a reality. So open banking, when it just came out, a lot of companies looked at it as just another way to request to gather payments or to process payments. But as we see now in reality, as we see in what's happening in a lot of companies, it actually allows any company to be at some point or at some capacity a fintech company. And it allows you to embed payments into your product without jumping through all of the hoops that you need to do in order to do it today, or going out to a third party and having a separate contract with the payments processor just to be able to work with payments on top of your platform. With open banking, it's as simple as getting a PISP license, which if you compare it to a PI license that Yoav here can attest to how hard it is to actually obtain, PISP license is fairly simple. And even without a PISP license, you can just work with an API provider that will allow you to piggyback on top of their license. And then once you have that, you completely own payments as part of your product. And that's the huge or the biggest revolution that actually open banking brings.
Yes, thank you very much. You're totally right. So, Yoav, what do you think?
Yeah, to your question, whether embedded fintech will be a hype. So I think definitely this is the trend. And we at UNIPaaS, as a payment infrastructure for digital platforms and marketplaces, we believe that every company should offer financial services. And there's a couple of reasons why companies should do so. First of all, the transactional data, especially starting from payments, is the most relevant for the commerce, is the most tangible one for the commerce. And platforms would like to be closer to this data and to own the payment experience. That gives them the advantage to look forward into generating their product features and to offer more and expand their offering going forward. But getting involved in the financials, getting involved and getting closer to the transactional data gives them this advantage, and this is why they should embed fintech and payments into their grand offering. So you mentioned, yes, we see platforms like Shopify and like Etsy Payment and like Wix are investing a lot in having their own payments. And what we do in UNIPaaS, and what we also see the trend is many smaller companies would like to do the same. Many marketplaces would like to do the same, be at the front line of offering the financial services and own this data in-house in order to move forward.
Yes, thank you. By the way, you mentioned embedded fintech and not embedded finance, and there are different opinions about it, whether it's the same or it's different. And there are people that says embedded fintech is not the same like embedded finance, because you take the fintech and embed it within or integrate it with the fintech, with the product within the system. So it's different from taking financial services within your platform. But just to be accurate with this.
I completely agree, and financial technologies is definitely the right term for that. Yes.
Yeah. So, Tim, what do you think about reality? Or I think we agree this is not a hype, but what do you think?
Yeah, I agree. It's definitely not hype. I think it's probable that it's going to depend on which sector within financial services you play in. So generally, we've seen consumers have increasingly high expectations of sort of the digital experiences that they have, and so I think in the space we're going to see continued adoption and innovation in that space, and there's going to be a huge kind of snowball there. I think in the sort of like core banking kind of space, so we're going to be more of your kind of lending and savings. Maybe there's going to be a slightly slower rollout. Potentially, there's going to be a group of consumers who are willing to engage with sort of these digital offerings, maybe with brands that typically aren't associated with financial services. It's likely also that there is going to be a set who will always want to engage with a bank rather than a technology firm or another brand when dealing with financial services. You talked about e-commerce revolutionizing retail at the start of this conversation. I kind of see embedded finance a bit like the introduction of hypermarkets or supermarkets. Some people might get to the supermarket, you can have everything in one place. There's a great shopping experience, and it's a lot lower effort. But actually, there are lots of people who prefer to go to the butcher, the baker, and actually they're kind of more analogous things. People will still want to engage with banks to get financial services. So in summary, I think it is reality, but I think there's always going to be a set of consumers who probably won't engage to the same extent.
Yes, definitely. Your line is a bit bad. Maybe you'll try to move a bit. So I want to go with you, Tim, and ask, you have mentioned the payments, and I think that payment is the natural evolution and the most easy to use financial service. But what about other services like lending and saving and maybe financial markets? Would it have to be the same penetration as payments, or do you think otherwise? Do you think that it would be maybe harder, maybe a lot of different demands in order to do it? So I hope your line will be better now.
So my wife is moving on router, so fingers crossed it gets better. Yeah, so at Zopa we are really excited about embedded finance and particularly embedded lending. Lending is kind of the core to our business. I think there are some more challenges compared with payments. So for instance, consumers tend to have less trust in technology firms when it comes to dealing with things like savings and lending compared with making a payment. That's possibly partly just due to the fact that kind of digitally embedded payments have been around for a while, we got used to it. But we see really big opportunities, particularly in partnering with challenger banks who maybe don't have a full service offering, or with technology firms who are looking to kind of get into the banking space, and actually by providing more full service offering, they provide more value to their customers and therefore they benefit as a result.
Wow, I hear you very badly. I don't know if it's me or everyone. But if it's me, it's okay. But if it's everyone, maybe you should move again. So just a quick note, Johnny, I got a message that I'm the opposite way on the panel. So maybe, I don't know, maybe you do something with it. We'll move forward, and Yoav, I have a question for you. Your company creates kind of gateway between the industry players. So what are the regulator stands around this? Do you see the open banking as a catalyst or a pushback to the industry? What do you think?
I think open banking is actually a beginning of a new era for the payment industry, because it really brings an alternative to credit cards, and that will and also it does something bigger, which brings back the ownership of the bank account to the consumers, and they are not locked within only the bank ecosystem. Many more players will join this game, and obviously this change in regulation will change the landscape of payments for the good of the consumers. We put this in UNIPaaS as the front line of our development and partnerships. And yes, it brings also regulation and also security concerns into the considerations, and we are still yet to be discover what will be the frauds practices in open banking, and these are things that I think everybody will find out in time. But it seems the capabilities to apply strong customer authentication and all these methods that we are familiar from the credit card activities into the open banking, and all these practices are already well known and prepared in advance. So yes, it's a challenge and consideration, but overall we are excited about this trend and revolution, and believe it will make shift in this landscape, and will give many more smaller players a place.
Yeah, by the way, it's nothing comparing to the compliance and regulations that the bank has to stand with, but I understand your challenges and your thoughts. And by the way, what do you think would be the place of the traditional banks or core system in the new environment with all these regulations or with these changes that happening? Noam, maybe you answer this?
Sure. So I think currently banks or even the neobanks, at the end of the day, you understand that problem of banking is something that is solved. So a core banking system, at the end of the day, it's a ledger system. And I think the banks that will be able to evolve or to move forward with this are the banks that will be able to build the most, I'd say, interesting or the best software on top of these core banking systems. So just now opening another neobank and offering accounts management, there is no real incentive to actually join. We see this with newer neobanks where the prices are starting to stabilize, whether it's for personal or for business banking, or even the premium packages. All of them are quite the same with the quite similar feature set, and banks that are actually able to offer more on top of this, which is more advanced SaaS on top of banking, is actually the ones I believe will work better and be the real next generation of banking. So we see this with some of the neobanks like Revolut, which are actually doing great jobs, and some of the legacy banks are also doing it. And we also see the opposite with other neobanks that are just a bank, and we see that are not as successful.
So you are saying actually that most of the traditional banks would be at the end a bank as a service. Let's say
some kind of software even as a service, not necessarily just. So some will use their own banking systems. We see other banks that are just buying outright core banking systems and building their front end and software solutions on top of that. And banks will either provide through APIs the core banking systems, or develop their own product and decide to close it as much as they can, since open banking is regulation, and just have their customers use their own products. But definitely we're going to see a lot of new software and very exciting products on top of core banking systems in the very near future.
Yeah. Yoav, what do you think with your experience with the banks?
Banks traditionally were always a bit slower to develop new, the edge of.
Do not forget your moderator, yeah?
Yeah, I'm not forgetting, but we are all in.
No, it's okay, it's okay. We know when we leave.
I'm saying traditionally, I think this regulation change, I think everybody realized, small and big players are realizing that if they don't do the actual necessary steps and be at the front of the features of the open banking, they will be somehow out of the game and they will lose market share. So obviously we can see banks are interested and involved, and we are actually discussing some very interesting partnership in that regard. And this kind of collaboration is a blessing for us.
Yeah. For us also, by the way. Tim, what do you think?
Yeah, hopefully my sound's a bit better now. I think we are clearly going to see a shift towards sort of brands and technology firms sort of playing a much bigger part in the financial services ecosystem. I don't think that banking is going to become this fully commoditized back-end thing, because as I mentioned earlier, consumers are still going to want to some extent engage with banks rather than technology firms to do some of their kind of business. But I think as we see this generational shift towards Gen Z and millennials representing the kind of core population, then I think it's natural that there is going to be a shift.
Yeah, thank you very much for this. So actually, one of, I think, the most interesting question that is going around the market is how you can differentiate your product in this environment, and what's in it for your company and what's in it for the end customer, and actually how do you do the differentiation between you and others in the industry. So I don't know, Tim, we'll start with you. You were the last one.
Sure, yeah. So I think at Zopa, we probably see that there are kind of two customers here. There are the firms that you are partnering with, and your success really depends on providing a really kind of strong technology platform that they can easily integrate with, and also then sort of providing value to them. So understanding why they want to get into embedded financial services, and make sure that your kind of core value proposition delivers on what they want to achieve. Now, I think from a consumer perspective, it's really about providing really strong or enabling really strong digital experiences. Speed is a really kind of critical thing in the UK. So being able to make lending decisions in a matter of seconds rather than a matter of days is really critical to being able to do embedded lending. And sort of increasingly as well, if I kind of stick in the moving domain, it's about, meeting the core consumer needs. So in the UK, customers really care about knowing whether they're going to be accepted before they apply for credit. So you really need to build propositions to both meet the needs of the consumers and the partners that you're looking to partner with. And that's really kind of built on having to have a really solid technology platform at the heart of it.
Yeah, I think speed is crucial. Noam, what do you think about this?
I think by just offering open banking and agreeing to roll over the benefits to the end customers is a differentiation by itself. So open banking allows you to have zero fee transactions and payments and instant settlement times. And once you give these benefits directly to the end consumers, you suddenly have a huge selling point that competitors that do not use open banking just cannot match it. And then once you're there, everything on top of your product is just, I would say, an added bonus. And at some point, you just treat payments as a feature and not as a core proposition of your product. And in our platform, by just offering these payments directly, payment collection actually, directly to our customers and the ability to get the full amount paid to them and the settlement time, which is instant, because basically an open banking transaction is between two parties. It's not like a card transaction when you have additional parties either mediating or facilitating the transaction, which, by the way, makes it feel much more like a cash transfer than a credit card transfer. And once customers start to understand that, yes, you can get payments as a feature, your competitive advantage becomes quite obvious.
Yeah, totally agree. Yoav, I think that you have maybe a different point of view on this.
For us, for UNIPaaS as an end-to-end payment infrastructure, the differentiation is actually coming from the core of our technology. We are building a solution ground up to solve a pain point that we all realized back in our days in working with legacy systems and single transaction mechanism. We are facing the challenge of multi-vendor platforms. And in order to provide them this payment infrastructure, this solution, we have to solve how do you deal with splits of transaction? How do you deal with e-wallet management? How do you automate payout? Because eventually every platform will need to be scale ready. It needs to reach to the point where even if it's a small startup today, but it cannot handle manual payments if you will scale up. And by having this understanding and at the right time, at the beginning of setting up your system and building and using the right payment infrastructure will actually give the efficiency that later will come with the scale. And you can scale without being 100 employees company. You can remain small and efficient. And this is where our main core value and differentiation is.
Yeah, and by the way, what is your business model regarding these services? So is it pay-per-use or everything is going to be infrastructure from your point of view? How do you make money out of it?
So the first principle for us in our business model is to allow our customers to monetize from financial services. We want to give them this and provide this growth, this additional growth engine to their business model.
Mm-hmm.
So obviously we are doing either it will be a rev share or offering the opportunities for them to charge for financial services. And from our point of view, the process we discussed this previously, but the processing fees the margins are not big enough expand, but there is a lot more for additional financial services. So our core value by managing those e-wallets accounts, by providing value of automating payouts, by providing the value in this kind of services will actually allow us to charge later for account management, etc. So it's not only the percentage of processing, but it's also the value that added to the management in regards to our business model. And yes, again, allowing our customers to monetize from financial services. This is our goal.
Yes. So actually monetizing the data, I guess.
The data is a foundation for the product that they will be building. We will help them to embed the financial services, whether it is lending or banking services, on top of the basic payment flow. Yes.
Yeah. Okay. Thank you. And Noam and Tim, Noam, what is your business model?
Sure. So we're taking quite a different approach. One of our goals is to simplify work and simplify life. The way to simplify payments in our eyes is to don't think of payments as or paying for payments at all, and we charge a base subscription fee as low as $5.99 per month, in which payments are included. So it's basically a new way of modeling accepting payments, which is subscription based. You pay a fixed fee. You can process any number of payments up to a very big limit, I would say, just in monthly volume. And that's it. Again, very, very simple to explain, very simple to understand, and very easy to accept as a way for me as a business owner to pay for payments.
Yeah, very interesting. By the way, do you see any, I don't know, maybe traction or any comments on this business model? Because it's not that usual.
Yes, of course. So like I said before, we treat payments just as a feature. So you actually subscribe to our SaaS, to our product, and you get payments included in it. So of course, we see quite a lot of tractions with our users, paying customers as well, which are using our product quite successfully.
Yeah, thank you. So I would be happy to hear if you can share maybe each one of you one success story about around embedded finance, maybe something that you did lately or you have an experience with it. Tim, you have something for us?
Sure. I guess maybe if I talk about something more generalized, I think what we're seeing happening in point of sale lending in the UK and sort of actually globally is kind of really interesting. So particularly, we're seeing this explosion of buy now, pay later credits, where there's just this huge. Sorry, there's a huge kind of uptake of these products in the kind of UK consumer base, particularly sort of the younger folks who are looking to buy kind of apparel on e-commerce sites. I think they're a really good example of how providing this really slick, embedded sort of payments and lending experience can drive high growth and rapid increase in customer numbers. So in that sense, it's a really classic example of embedded finance done well. On the flip side, actually, it's also an example of things being done badly because there's sort of emerging tech companies without experience in sort of core banking, without an understanding of some of the regulations. What we're seeing is that, you know, sometimes outcomes are quite poor for customers. You know, so lending is often not, you know, responsible, and we're kind of gradually seeing that come home to roost, and you know, it's becoming increasingly discussed in the press, the kind of bad outcomes of these practices. So one of the things we'll be trying to do with Zopa is combine our strong capabilities in technology with our knowledge of how to do lending well and create better propositions that work for both partners but also consumers.
Interesting. Thank you very much. So we don't have much time left, and I want to go to our last question and not to skip it. How do you see the future? What capabilities do you need at your core platform capabilities, and Would it be only payments, or maybe you would, expand to more areas like Zopa? Noam, let's start with you.
Sure. So currently we implemented the payments part, or the PISP, I would say, part of open banking. We definitely have plans to expand into the account information or the AISP section as well, and that will enable us to offer a lot more financial products on top of our platform. So whether it's lending, or as Tim said, buy now, pay later, or financing on checkout, which is something that again is now something we can do without using a third party for it. So using AISP, we can have insight into credit scores and risk associated with a specific customer looking to get financing at checkout, and have the ability to offer it ourselves as part of our platform.
Excellent. Yoav, what do you think?
From interacting from many customers and many smaller runner-ups that are just starting their journey, or in somewhere in the beginning, we see a lot of attention of embedding fintech and financial technology inside the product offering. They are very interested, and they would like it to be part of their journey, of their product and offering. They would like to control the funds flow of their ecosystem, specifically if it's a marketplace. We would like to see what's the status of his vendors, how much balance is left for the delivery guy. Maybe I can offer him a lending. So there is many possibilities and opportunities opening if the platform has this kind of empowerment. And this is what we do, and we love working with those customers that are, even if they're small, they are planning their scale ahead, and they are interested in implementing those fintech capabilities and payment capabilities inside. So the future, I believe, it will just be a commodity. More and more smaller companies would like to have this engine and this capability, and we are excited to do that.
Amazing. I agree, by the way. Tim, what do you think?
Yeah, I couldn't agree more. I think outside of payments, we've really just begun to scratch the surface. So as Noam said, I think that there's going to be even more innovation in terms of lending that happens at the checkouts, and that's only going to grow in popularity. And then I would expect that lending in particular sort of really begins to ramp up as consumers become more used to it. And actually the financial services firms, develop their capabilities in this space and have something that's increasingly attractive to their partners. And against all of this, we see the regulators kind of globally, that the UK has been leading here, are really encouraging of innovation in this space. And actually that's kind of really important to enable this innovation to happen. And so as things like open banking continue to develop, and maybe we move to sort of a broader open finance type initiative, then I think customer value propositions are only going to improve and options only going to improve.
Yeah, definitely. And my 2 cents about it, by the way, is that I think that we see financial services everywhere. As you mentioned, it's like a commodity now. I think that in the future we will have to find a balance between the banks and the fintechs, and we will see more and more partnerships, whether it would be like white labeling or even marketplaces and so. I really believe that this is just the beginning of the future that we would see. And I think that we are running out of time. I'm not sure. Yes. So I want to thank you for being with me here. It was super interesting for me, actually. And thank you very much. It was a pleasure.
Thank you. Thank you, Meital.
Thank you very much, guys. A thoroughly exhilarating panel of industry leaders. Zopa, what I would call the grandfather of fintech, really, and newcomers, UNIPaaS and OSU, and obviously can't have a panel without a legacy bank. Thank you very much, guys. thoroughly insightful. Thank you for sharing your thoughts and insights with us. We're going to, can you please show your